Hello everybody, Jimmy Young here, and this is a special session I'm putting together to go over the changes. We have some changes on the Jimmy's Band system in terms of the entry, the exact entry, and also for some of the newer people to walk you through how to get started, how your day starts, and how to get rolling. And I just thought it would be very helpful to do this. So session. What I need to do now is share my desktop, and I believe, this is monitor 2, and yep, you can see we're sharing, so good. Alright, so I'm going to take you through the process. The way you would start is you go to your mailbox, you open up your mailbox, you get your today's trade finder, so you click on that. And it says download the file, so you hit download. And it's giving you the WRF file, which will give you a review of yesterday and a preview for today. You also have your PowerPoint, and you also have your high-low charts. The information on the PowerPoint I can also get directly from my high-low charts. I cut and paste a lot of that information into the PowerPoint from the high-low charts in terms of the information, the previous slide we used for today. So I'm just going to simply download my high-low charts here, and I'm going to say open it up, and it shouldn't take too long, a few seconds. And there it goes. Okay, so this is the high-low charts. You got this in front of you, and this is the preview. So this is what you need. So starting with the euro-dollar pair, what we need, the key information we need is we need to know what was the opening price. We need to know if it goes down, where we find support so that we have our number for room to go. And if it goes up, where we find resistance, so we have a number for resistance. And lastly, we need to know, we're looking at the euro-dollar pair here. We also need to know for the European, for the London Momentum, for the Jimmy's Band system, what is the swing requirement number? In this case, 116 points. Now, we would also look at what our tactics are. So our strategy is we're going to look for one or two system trade signals. Now the systems we're talking about is Jimmy's Bands and European breakout. We're going to look for try and get a couple of good signals, and then play those signals as long as there's room to go, as long as the Dow and DAX are not telling us we're totally wrong. And we can also look at the 1-hour charts to see if there's dojis and hammers, and look at the 5-minute and 1-hour charts, and look at the retracements. Especially once we've had a signal, if the signal ain't doing well, we can look to try to double up or even put it on at the 78.6 retracement level. But the key numbers we start off with is the opening price, the 14 average, and above and below the opening price. And those are the key numbers along with the Jimmy's Bands numbers. So let's go ahead and put this down for a second. We don't need this one. We don't need this one. So we'll do is switch over to charts. So now what I want to do is open up my NetDania charts. And what I want to do is take that information we had there, the start of day price, the room to go numbers, and we want to put them on the chart. And we also want to put our Jimmy's Bands on the chart. So for purposes of doing this, I'm going to open up. I'm going to minimize this background. I'm going to open up a fresh window. So let's call it Workspace New, and we'll call it Shift Euro-Dollar JB Sample, I guess is good enough. It's the one we're using for today. So let's say we start off with a blank workspace. That's a workspace. Next is the instrument is the euro-dollar pair. Notice we got a 1-hour chart. We want to change that to a 5-minute chart. We could just click right here. That would change it to a 5-minute chart. Or we could leave it alone and we could change it to a 5-minute chart by going time scale, 5 minutes, and that would change it to a 5-minute chart. But it's kind of easy just to click this, or you can go to time scale and choose it. So now we got a 5-minute Eurodollar chart, and that's what we use to trade. We put that up, and now we're going to this chart. The time on this chart is in London summertime, British summertime. So that's the time on the chart. So that's what we're seeing down here. Now we have to. Our start of day is 2200 hours, which is over here, and our end of day is 2200 hours. But where you should be looking at in the morning is this around close to 7 a.m. because at 7 a.m. is when we start trading. Our start of day, for purposes of our European breakout system, our start of day system, for our room to go numbers, everything is based on the 2200 hour price, the 10 p.m. London price, but we assume you start trading when you wake up in the morning at 7 a.m. So what we need to do is we need to zoom in, and what we want to do is, first of all, see how many periods, 330? Well, you can go view periods. I put 300 there. That's when I do the Trade Finder, when I do the review for Trade Finder, I always have 300 periods up there because that covers 24 hours really well. So now, when you're looking at this as of 7 a.m., we would go back to right there. So now I'm right-click on my mouse to the information bar, and you can see that's 7 o'clock. So the day already started for our purposes. Right here, the close of the I'm looking at the information in the box over here, guys. So as I move over whatever candle I'm on, so right here, that's the 655 candle, and the close is 135.58. So that is our start of trading day price. Start of trading day price. When we go over here to 2200 hours at the close of the 2155 bar, that would be 135.87. That is our start of day. So one is the start of day. Let's put those lines in. The way I would do that, I would go up here to lines. I'd go down to add lines. I go down to freehand, and I drag my mouse down near the bottom of the chart where I can see the times. And I want to put I want to put a line at 2155 because after that, it's the new trading day. So this right here, 2200, is the start of the new trading day. So what I do is I go edit, add a little arrow, and I pop a little arrow in and say, right there is where my trading day starts. Right in there. So maybe put it on top, it looks a little easier. So I would go edit, add annotation, and I could write out start of day. Normally I just put start, and underneath start I put the price, which is 1.3587. So for our trading day, we're starting at the price of 135.87. So that's our start. Now from there, remember 7 o'clock right here, just once again information, 650, so we got to pull this over one more. There's the 655. Right over here, edit, add arrow. We're going to call this right there at 135.58, that price right there. That's called edit annotation. That's our start of trading day. If you notice in Trade Finder, you'll see the comment, start looking for trades after 7 a.m. So that's why as of 7 a.m. we're going to start actually trading. So that's where our trading day starts. The very next bar after this one. So what I would do is create one of those lines and stick it right on that one to say after that we're going to start looking for trades. Lines, add lines, freehand. And I go down to 655 and put that line in there. So this becomes where we start our day in terms of keeping track, and over here is where we start our trading day. Now, we've got a couple of things we're interested in. One thing we're interested in is, well, actually a couple of things. We like to put our Jimmy's bands on the chart. So let's go ahead and put the Jimmy's bands on. As a matter of fact, let's hold off a minute. Let's do this in order. Based on the starting price, we also have our what we call room to go numbers. We have a number to the upside, 137.41, and a number to the downside of 134.33. So what I'm doing here is I'm hitting shift and I'm using the little scroll thing in the middle of my mouse, and what it's doing is squashing this chart up for me. And I'm looking at, I want to get 137.41 in there, so that goes right there. And on the bottom side, I need 135.41. I'm sorry, I need 134.33, so I just need to scroll this once more. One more little scroll, and then it's all going to fit in. So move it up a little, and then I'll be able to get everything I need in there. So now I need to create two lines. One along the top to say this is where you run out of room to go, and one on the bottom telling you when it gets down here. So in effect, we're not saying this is support and resistance. What we are saying is on a normal day, it shouldn't go beyond these levels on average. So as it approaches these levels, we want to be aware that it probably has a good chance of running out of gas. And we use it when we take trades to make sure we have enough room to put the trade on. And I'll show you exactly how that works in a minute. So right now I'm going to go lines, add lines, horizontal, high, low. I'm just going to put a line there, and I'm going to pick that line up. And if you notice all the way to the right here, it tells you the price. And we want 137.41, so we want to create a line right there at 137.41. Now what I like to do, I'm right-clicking on it. I'm going down to Properties, and I'm making it red because it's a warning signal that this is high enough. And if I have any, and I make it a little bit bigger, just a little bit, apply it. So that's my room to go. Now what I normally do is I go Edit, Add Annotation, Room to Go. Now keep in mind I have all of these written out already, so I don't write them every night. So I already have I just cut and paste. Room to go, and we know the number is 1.3741. And then the color, we want to color code it and make it red as well. So we know exactly what we're talking about. We know what this cancel, escape. Okay, so take that and put that right there. So we know if it gets up here, 137.41, that we got to be aware that it's not used as a place to be looking to sell. It's a place in the event you buy that your target for profit will be before that level. That's the main purpose of the room to go number. Okay, now on the downside, we're going to use the level of 134.33. And once again, I'm taking these two numbers, 134.33 and 137.41, along with the opening, directly from my Trade Finder. You can find this in the high-low chart, or you can also find it on the PowerPoint that accompanies your recording for Trade Finder. So I'm going to put that level in, 134.33. Now what I can do is copy this line. I go Edit, Duplicate Object, and I can just pull this line down to 134.33. It happens to be right there. And then I'm going to duplicate the room to go and put that there as well. I usually do it like that. That one's on. This one I can put underneath. Either way is fine. I don't really have an exact method. Now this line here, I just want to change the color to green because it's a level where we should be thinking. If we're short, we should be getting out of our trade that has gone far enough. So I just change the colors. That's all I need to do here. And then I need to change the actual price to the 134.33 and apply and OK. All right, so for purposes of any trades we do, where we figure out this one here, moved a little bit. I'll just move it up there a little. That one looks fine. Remember, this is where we're starting our trading day, so we have all this information going back. When we're looking at a 5-minute chart, when we're looking at part of the day before and part of the current day, there's lots more we could look at, but this is our starting point, and this is how we figure out where we're going to get our system signals based upon two systems. One's Jimmy's bands, and the other is European breakout. And then from there, once we have a signal in hand, we're thinking about whether we should take that signal. And then I'm going to go through your process, the whole process of that right now. So the next thing we need to do is put our Jimmy's bands on the chart. So let's go ahead and do that. We go up here to Studies, and we scroll down to where it says Envelope Trading Band. We go over here, we put 60 for periods. It's actually a 60-period simple moving average. And then we use a variance of 0.1%. So instead of having a line to the 60-period moving average, we have a line that's 0.1% above the 60-period moving average and 0.1 below it. And those two lines is Jimmy's band. That's what we use for our trade, and we're going to go through it step by step. So I'm going to say OK. So there's our Jimmy's band line going through the price. And what we're interested in is, as our trading day starts, what may be our next signal in Jimmy's bands, and we need to, at this point, to be thinking, what's our plan of action going to be? So now, for Jimmy's bands, we have two requirements. One's called a swing requirement, and one's called a bar requirement. The swing requirement has to do with, for a Jimmy's band buy signal, we need to have, the prices need to come down at least a certain number of points on the last swing. And in this chart here, you can see that this is the high and this is the low. So the last swing would be from that high to that low. Prior to that, the last meaningful swing you can see is from here up to here. Now you probably look at it and saying, how come it looks from here to here is a swing? That's true. Then you had this one down. Now here's the rule. If this one down is not big enough to qualify as a downswing, then this upswing that started here continues to here. If this little one here doesn't qualify and it goes back up, you're still in one big upswing. And you're either in an upswing or a downswing. You can figure it out by looking at it. But what we're after, the end game is, do we have a situation such that we're going to be getting a trade signal? Now, a trade signal for the Jimmy's band system is, in order to, we need to meet two requirements, a swing requirement and a bar requirement. But before we even look at them, we would need to be in a condition where a signal may be happening. A signal may be happening could be a bar that's completely below or a bar that's completely above. So in this case, if you look at this red one here, it's completely below the red line here. So this bar could be a sell signal. Over here, bars that are completely above the green line could be buy signals if it meets the two requirements, the swing requirement and the bar requirement. Now, in this case, as was right over here, the price has come down quite a bit. And so we're going to go through and look at whether the swing requirement has met in case this price does go back above here. Now, the number we look at is this one here, this 116. So we need a swing in the euro-dollar pair of at least 116 if we're going to be thinking about taking a signal. So I'll give you an example. On this way up here, okay, from this lowest point here, this price here was 134.90, and this price here is 136.50. That's 160 points up. So at this point in time, we're in an upswing. We've met that upswing requirement because it's 116 or more, which means if it can meet the second requirement we haven't discussed yet, which is the bar requirement, the next time a bar is completely below the red, we would have a sell signal. Now you can see over here we had three instances where we touched the red, went below the red, but none of them were completely below the red. The first one that's completely below the red is right here, this one here. So we know we met our swing requirement. Now from this high point here of 660 down to this point here of 590, that's only 80 points. So 80 points that wouldn't qualify as a downswing. So this upswing is still in play, and as it makes still another high, this becomes one big upswing from there to there. So edit, add arrow. I'm going to put this in and I'm going to take it out. I'm just going to put it there for a second. That is your latest swing as of this point in time. Now, as the price starts to come down, you met your swing requirement. The other would be the bar requirement. Now, the bar requirement is like this. Starting with a bar that's completely above the green line. Now, starting from the point at which you're measuring your swing. So, right over here, this bar is completely above the green line, that little red one. Here's the green line. This one's on it. All of them are on it, but this is totally above it. So, starting from this one, do you have 36 in a row with none of them being below the red one? If you do, then you've met your swing requirement for this particular swing. So you can see an easy way to do it. 12 5-minute bars is an hour. So if you look down, you see it's about 12:15. So 1:15, 2:15, 3:15. You can eyeball this and look and say we're up here. And it's been 3 hours, and we haven't gone anywhere near there. So our swing requirement has been met. Our bar requirement has been met by from here to 36 of them. You don't need to be exact. As long as it meets the setup, you're done. There's no extra points for being exact and pinpointing things and drawing these lines on a chart. You just need to be confident that you've met your swing requirement for a sell trade. You've met your bar requirement for a sell trade. So the next time it actually closes, a bar completely goes below the lower band, in this case right here. That would be this one right here. Right here, this one's totally below it. You would have your sell signal right there. Okay, so that was a sell you got the day before our current day. So we knocked this out, right? Now our current day starts, and we're going to look in hindsight at all of this trading that's taken place. So we had gotten the Jimmy's Band sell signal over here. We know that in hindsight. And now that was at 90-something. Now we're down at 60. Okay, so, but now for our purposes, what happened back here is not too important. What's more important is when a bar completely goes above here, is that going to give us a buy signal or not? And the answer would be, well, did we meet the swing requirement? So we can look at this point. This is our swing high. Edit, add arrow. So knowing that that is our swing high right there, edit, add annotation, swing high. All right, there's our swing high. And then we want to know what our swing low is since the swing high. It was over here. It did not go up 116. This is the number we need. I'm sorry, let me double check. That number is 116. We know this one was more than 116, and this was less than 116, so our last swing went from there to here. So this is the high from the last swing. It goes down, and that's only 90. That doesn't qualify, but it doesn't, from the lowest point, it doesn't go up 116, so we're still in the same downward swing. This little one is not 116. We're still in the same downward swing, and this is the lowest so far. So to meet the swing requirement, it needs to have at least 116-point swing. So what we would do is we would go edit from this high point, which we know the price to be 136.68, to this low point, swing high 1.3668, apply OK. From that swing high to this swing low point, 135.41. So what I'm going to do is edit, duplicate to make it a little easier for myself. I hope you don't mind. I'm going to just drag this down and say that's the swing low. Drag this down, and then I'm just going to right click on this and change it to swing low and put in the price 135.41. Now, if this seems long to you, it's because it's the first time. You know, when you've been doing this a while, this whole process becomes almost just an eyeball process where you just look at the chart real quickly and go, what's this number? What's that number? Is it on it more than 116? Yeah, 116 or more to be exact. In this case, 136.68 minus 135.41 is 127. 127 is 127 from the high point to the low point. So that's your swing, the amount of your swing. Now, we need the swing to be at least 116. Is 127 at least 116? And the answer is yes. So therefore, we've met our swing requirement. Our swing requirement's been met, so we know that's in business. Now, the next thing we need to look at is our bar requirement. Now, we have not got... It has to go above the green line. Above means above. Above does not mean touching. You know, the old expression, close but no cigar. So it has to actually go above to disqualify. So you can see right here, you can see what, down here you can see what the band is, and up here you can see the open, high, low, close. So the upper band was 95 and the high was 95. The upper band was 68, the upper band was 95 and the high was 95. So on both of these, the high was 95 and the band was 95. So it never went above the upper band. In any event, you can start counting from where we got that original Jimmy's band signal, because this bar is completely below the red. So starting with a bar that's completely below the red one, you have 36 in a row without any going above the green. If you do, at any point between the swing high and swing low, once you've qualified. So right here, you can eyeball it here and go, we're over here, and we need to go 3 hours. So to be conservative, you can say from 21 to 0. So right over here, you already definitely have more than 36, this little one here. So you met your swing requirement, boom. You've met your bar requirement, boom. So the next time a bar is completely above the green one, at the close of that bar, that's going to be a valid buy signal for Jimmy's band system. A valid buy signal. So now, that's all this work we just did is to say, okay, if we do get a bar completely above here, it's a buy signal. And we know beforehand, before it gets there, that we should be considering that and thinking about that trade. Now, as time passes, now think about it, that's not a signal yet, because even though it went above the green line, the whole bar is not above the green line. And by the whole bar, we mean from the lowest point, the very bottom of the bar, to the very top of the bar. Not just the blue or the red part, but the entire thing. That one there is still touching the green line, so no good. Not that one, not that one. Nope, 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 nope. This one. You can see this one here is completely above the green line. It starts over here, which is above the green line, and ends up here. So the entire bar is above the green line. This is a Jimmy's band buy trade signal. And the price it closes at, information window, we need to look at the close, this one here. The close is 136.06. So, edit, and we're going to go add arrow. And we go edit, add annotation. We have a JB by, I don't want to say signal because it's more than a signal. A signal is, the signal is 136.06. Now, what we have to do is we have to add the retail broker spread to that to come up with the correct price. Now, the spread on your platform is usually 2 points. You'd have to take a look, but you have to add that in. And I could show you that. As a matter of fact, I will. But I'm going to first put 136.08 as the actual price we can buy at. 136.08. Now, apply, okay. Now, for some of you, this is still a Botox commercial. It's been a Botox commercial since you started working with me on trading. You still don't quite understand this. So I actually have a way of showing it to you. I figured it out today with my son, who's incidentally been a tremendous addition to the team. What I'm going to do is I'm going to show you how you can once and for all visually see what's going on with this adding the spread or not adding the spread business. So let me just show you real quickly how to do this. What I'm doing here is I'm opening up my brokerage platform. I use a cash broker here in the U.S. So it's taken an awful long time. Not sure why. I think it's because having the WebEx open and trying to open GFT at the same time is sometimes challenging. So I'm gonna go out of it for a minute, give it a fresh try. We'll try it a couple of times. Hopefully I can get it. There we go. So now that would be me. Password, I'll tell everybody it's ... Same old jokes, right? Okay, live system, English, login. Now watch how cool this is. You're finally going to get this once and for all. All right, so here's a live chart of the euro-dollar pair. Here's a live chart of the euro-dollar pair. Here's the current price, 135.38. You see it? That's the current price on the chart. Now look at the current price over here. You see? The current price is 38 to 40, yet the chart says 38. So the chart always shows the lower price. So when we say we have a buy signal right here, for example, at 135.38, the place we could actually buy it at is 135.38 is actually 135.40. So even though this says 38 here, that's showing us the lower price, the price we can sell at. We know we need to deal on this one, the higher price. So whatever price we see here, we add 2 points to, and that tells us in the real world, when we get our signal, when we're getting our signal to buy at 06, that's where the signal price is. We need to say our actual buy price is 08. I hope that's clear. So I'm going to close that off for now. And okay, so now from there we're buying at 136.08, maybe. Why do I say maybe? Because we have to say, the next thing we need to say is where would our stop loss be? And for this trade we would put our stop loss below the low of the day so far. The low of the day so far is also the swing low. This is also our low of the day. Now what does the day mean? It means from 10 p.m. until right now. What's been the lowest? It would be right here. It would be 135.41. So our stop loss, edit, add annotation. I'm going to put a little annotation box in here. Let's figure this out together. See, what we would say is, we would go, okay, we want to sell at we're going to buy at 136.08. That's our buy price. Minus, where we're going to stop ourselves out, 1.3541. That equals how many points? And the answer would be 59 plus 8. 59 and 8 is 67 points. Now, don't get confused by this. What we do is we like to risk a slight bit more to round it to the nearest 5 or the nearest 10. So we would either, in this case it's 67, so we always round it against us. So the nearest round against us would be 70. So we want to make our risk 70 points, and the purpose is to give our trade a little more room. I'm sorry, I made a little mistake here. If the swing low is 41, then we would put our stop at 40, which means we would risk 68 points. 1 point below the low is where we should put our stop. But we know sometimes with the brokers or the spread bettors, if we put it at the exact low, sometimes it doesn't quite reach there, misses it by a point or two, and we're still going to get stopped out even though our Netdania chart ain't going to say that. So to make up for that, we like to give it a little extra. So in this case, instead of risking 68, we're going to round it to the nearest 5 or the nearest 10, and we're going to round it up to 0 or 5. So in this case, we want to risk 70. So risking 70 would mean if we're still buying it at 08, it would mean 1.3608 minus 70 equals 1.3538. So that's going to be our stop. We're going to use 135.38 for our stop loss. So now what I would do is go stop loss 1.3538 and put it in red so I know it's a stop. Apply OK. So stop loss 135.38. Cancel that. Escape again. Okay. So now 135.38. Now what I do with that is I put that on my chart because that's a real level. 135.38 is where I'm going to put my stop. So I'm going to the start of trading day. Okay. That's something you won't see on your daily review. Or I usually don't put that in there, but I wanted to show you the difference. The start of day is what we use for purposes of looking back for another system, for purposes of determining what our room to go numbers are. Our actual start of our trading day starts at 7 a.m. So I'm going to erase this start of day word, and I'm going to take this little arrow because I need it. I'm going to move it down here to 135.38 because that's where my stop's going to be. And I'll just make that nice and even. Okay. Whoops, that's a little crooked. Okay. All right. And I'm going to make it red because I like to, like I said, I have all this done. I'm doing it again right now, but I have all this done for myself. So I don't have to do this every day. I'm just doing it for you to help you guys out. So if that's going to be our stop loss, and that's the correct stop loss because it's below the low of the day and it's rounded it properly such that we got a couple of extra, giving ourselves a little couple extra points by rounding it to the nearest zero, in this case 70 points. Now, is our stop loss, the stop loss is fine. Now, what we want to figure out is if we use a 1-to-1 risk-reward ratio, which means if we try to make 70 points, if we add 70 to 136.08, that would tell us where our profit target would be. So if we risk 70, we want to try to make 70. That's a 1-to-1 risk reward. That's where we like to start. So what we would do is we would know at 136.78, 70 points higher, that's where we would be looking to take our profit. This is where we would be looking to take our loss. So we want to put that number in. So we're going to go edit, duplicate object, and I'm just going to take this little arrow and run it up to 78. That would be right there. That's 78, and I want to make it green because that'll be money. That's where the money is. That's the profit. If it gets there before it gets down to our loss, that would be our profit. And then edit, duplicate object. And we need to put take profit just so it's very clear. Here we go. Take profit. First of all, we want to make it green, and then we want to go to the text and say take profit. Take profit. 1.3678, 70-point risk or 70 points profit. Let me say OK, apply it, and OK. So now we got our take profit. So this is our trade in its entirety, the trade we're looking at doing. All right, we got our stop loss, we got our take profit. So we're buying it here. This is in real time with make-believe. This would be your stop, and this would be your take profit. And now there's more stuff we can do, but what I want to do at this point is run through a Jimmy's Band example, top to bottom, and we'll continue and I'll cut the tape and make new tapes for the other parts of this. I want to break it down for you. So, okay, so now, the next thing we would look at before we take this trade is, do we have room to go? Room to go means we have room to go up to 137.41. To take our profit on our trade, we only need to go to 136.78. So yes, we have plenty of room to go to hit our profit before we run out of room, so to speak. So yes, we do have room to go. We do have a valid Jimmy's Band signal. This looks like an okay trade to take. Now, like I said, from here there's other things we look at. We're going to get to that later. For now, we just want to walk through this Jimmy's Band system and do it one step at a time. So let's look in time. So far, so good. All right, so trade's doing okay. It's looking okay. It's heading in the right direction. All right, a little correction down. So now we're back to break even. And this is the thing about trading. You got a 30-point profit, and now you have nothing. A couple of points. That's just the way it is. Now you're losing a little tiny bit. You were losing 10 points. Now you're back to even. And now you got a little bit of profit, but then it's disappearing. You still got 10. All right. Now, the great speculators in the market, this is just an aside, has nothing to do with the system. And incidentally, my son, he helped me with this today. We were looking at this together, and he said, Dad, look at how it comes right back to that green line. Does that mean anything? And that does mean something, but not right now. Let's stick with just the Jimmy's Band trade. So when you start making a new high, usually that's a sign it wants to go higher when it breaks the old high like that. See, it couldn't do it here, but it couldn't break the low there. So this is looking okay. It's trading the way things trade. It's going up, coming down a little bit, going up, coming down, going up, coming down, going up. So this looks perfect so far, and it's made a new high. That's looking good. That looks really good, making a new high. Now, the proposition is starting to not be as attractive as when we started, because now we have a 50-point profit, and we're only trying to make 70. So we can only make 20 more. Yet at this point in time, we could lose our whole 50-point profit plus a 70-point loss. So at the moment, we're trying to make 20, and we're risking 120. That's why it would be nice to be able to learn how to read the market in real time right now, and be able to see signs that maybe should grab the 50 while it's there and not let it turn into a loss. Because once we close this trade, we've made money, profit, 50 points. We've also eliminated all risk because we don't have a position anymore. So when we bought this, we have a position and we have risk. When we sell our position, if we sold it, we would eliminate the risk because we no longer have any position. This would no longer be needed. All right, so we're still in it. It's looking okay. And again, this is the frustration of it. You have 50 in it, now you only have 30 in it. And then now you have 40 in it, and that's the way things trade. Now you start making a new high, you're getting even closer. Now you're hitting your profit. So right here, this would be your profit on your first trade. And so I'm going to, if you don't mind, I'm going to F1 this. Just make a little picture of this one here. And see, just to have a little picture. Okay. So now you've hit your just get rid of that. I just wanted to make that picture. Take that out of there. I think I screwed up, guys. Unfortunately. Did I? I don't know what I did here. What the heck? Let's get rid of that. Okay, now I'm good. Thought I messed up. Okay, so now you hit your profit level. Once it hits, because you want to sell at 78. So the first time it touched 78 right here, you close your trade. You made your 70 points. That's a complete Jimmy's Band trade. Now let's look at what else is going on at this point in time. We had a swing low of 135.41, and now we have a move up, and we're at 136.90. So that's 150 points higher. Your swing high is 690. Your swing low is 541. So you have a 150-point move here. So now we know 116 points is a swing. So we had from a swing high to a swing low, we were in a downswing. Now, as soon as we get to 116, so you add 116 on to 541, that would be 657. When the price got up to 657, so when this price got up to here, you now had a valid upswing. Can you see that? Edit. It doesn't affect the trade you're in right now, but it affects what you're doing next. So right up here at 57, right there. Okay, right there at 57, you have a valid upswing. So now you have a valid upswing. And starting with a bar that's completely above the upper band, this one here, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36. You've got your 36 bars, so you meet your bar requirement. You have an upswing of at least 116, so your latest swing is up. So you have an upswing, and you've met your bar requirement. So that means at this point in time, right over here, when you hit the 36 bars, you've met both of your requirements. So the next time it's completely below the red line, you're going to be getting a sell signal. So you want to keep that in mind. Now let's progress. Price starts to come down. Now, again, each time it comes and hits this green line, it's probably an indication that perhaps it's going to try for another leg. Until you get up here, then it would be suspect. Or it's going to start to reverse. Now here, you start to think, warning, maybe it's time to get ready for a sell trade. And see over here, it's fighting it. As you can see, none of those would qualify because all of them are touching the red line. But now, this one here, at 136.14, starting with it's totally below the red line, and the bar ended at 136.14, so that's going to be a Jimmy's Band sell signal. Edit, add arrow. Right at the close of that bar, which closed right there, that's 136.14. Edit, add annotation, no edit, duplicate object. I'm going to take a shortcut here. I'm going to take this Jimmy's Band buy, move it over there, and move it right about there. And then what I'm going to do is double click it, and I'm going to just change it to a cell, JB cell, and that's going to be 1.3614, and say OK. So now I've got a cell at 136.14. So now I need to go through the same process. If I'm going to sell it, where is my stop loss, right? So my stop loss is going to be what's been the high here. The high here has been 136.90. So 1 point above it would be 136.91. So see, when you go through the calculator, I'm going to go to a calculator this time to save a little effort, and pull this calculator over here. See, you got 136.91, 136.91. That would be 1 point above the high. So that's where we could put our stop at 91. But then 1 point above the high, and then we need to add 2 points for spread. So plus 2 points. So at a minimum, we have to put our stop at 136.93. Now, we're entering the trade at 14, and we don't need to adjust the spread because we're selling. And this chart reflects the lower of the two prices, as we saw when we looked at the GFT before. And okay, so we would put, instead of 693, 614 would be 80 points. Actually 79 points. So we'd round it up by 1. We'd round it up by 1 more point, and we'd make our stop 94. And we're getting in at 14, so we're going to risk 80. So what we would do is we would go, all right, so stop loss, edit, duplicate. I'm going to take my stop loss from down here and just take a copy of it. We said it would be 94, so we will put it right here at 94. That's where our stop loss is. Actually, see, 92 When the price gets to 92 on this chart, it's going to stop us out at 94. So what I normally do is put it on the chart where it's going to get stopped out, because when this hits 92, the price on the broker is going to be 92 to 94. The price in your spread beta, rather, is going to be 92 to 94, and that's when they're going to stop you. So when this gets to 92 on the chart, your 94 stop is going to be triggered. Stop loss 94. So I don't want you to get confused because it looks like the arrow's slightly out of place. There's a method to the madness. So 136.94. If you're afraid of this, it's because you haven't really done it for real. Once you've done it a couple of times, it makes a lot of sense. So 94 is the stop, and 614. So now we need to figure out the profit level. So we would go back to the calculator, and we would go 136.14 minus the 80 points which we're going to risk would tell us where we need to buy it to get a one-to-one risk reward. And the answer is 135.34. Now, we want to actually put our order in to buy at 135.34. This chart is going to have to go down to 135.32 so that the price is 135.32 to 135.34, because that's where our broker will fill us. So 135.34 is our correct price. So edit, duplicate object. I'm going to take my profit at 135.34, which is really going to turn out on this chart. If it's going to get filled, it's going to have to get down to 32. So it will be right there to be dead accurate. That's where you'd want it. Even though you're going to have your order in at 34, you put your arrow by 32, because if this chart don't reach 32, you're not going to get your fill. And again, don't be afraid of that. It's just something you have to actually do a couple of times to understand. It's just like driving a car. 135.34. That's where our take profit is. And what we've done is we're saying, okay, what do we think of this trade? Well, we sell it here. Our stop will be here above the high of the day. And our profit is over here, and our room to go number to the downside is off the chart at the moment, so we're going to have to put that in there. So I'm going to make this a little bit smaller, and there it is. So now that, push it up a little bit, and we can see it very clearly. I can actually open it up a little bit. Maybe there. We can do that. That looks pretty. Yeah, there you go. So you have room to go down to you have the room to go down to 134.33. For this trade to work, you only need it to go down to 135.34. So you do have plenty of room to go down. And again, when we're looking at these trades, there are other things we could consider. However, for purposes of the Jimmy's Bands, let's just walk through today's trades together and learn the Jimmy's Band system. And not worry so much about other stuff to make this more complicated. In a simple algorithmic, put my trades in, I don't want to know anything, I don't want to do anything, this is the way it would work without considering anything else. So now, we know that swing is good. Now, we know the swing here we use to create, to justify or create the setup for the Jimmy's Band. The swing now is all the way up here, right? So that's the end of our last swing, was 136.90. So 136.90 minus 116. So when this comes to 135.70 approximately, we should be aware that we have a valid swing down, and if it does spend 3 hours down here, we could be looking for another buy trade eventually. We should be aware of that. But the only key point we need to know right now is that we're still in an upswing until we can get 116 down from the high point. So we're in an upswing. We're in a sell trade now. There's our stop, and there's our profit. Let's follow through here a little bit. So far, nothing's cooking. It goes against us a little. We're in at 14. It's up at 41, so we're out 27 points on the trade. And now we got a quick 10-point profit all in one swoop. So that's pretty good. And if we can get through these lows, that would be a good thing. If we start making a new low. So in other words, you got a swing here on a short-term basis. It's not big enough. This is not a valid swing for Jimmy's Band because it's only 86 points, but it is a swing down, a little swing up, and now you're starting another swing down. If you can get through those lows, that would be a good sign, so to speak. And certainly as a general rule, since you put on your trade, if it can stay below the Jimmy's band upper band when you got a sell trade on, as a rule of thumb, you should be in pretty good shape so far. You're not really, you're on the right track, so to speak. Just like when we bought it here, it never went below the red the whole time. It just tells you you're on the right track. It's not part of the system per se. So now once you break through these lows, that's a good thing. Now what I told you before is what a lot of traders do is it makes the first high, it makes a move down. There's not exact numbers on this, but when it gets through the high, they consider this to be a really good place to try to buy for a little more of an upper. Just like over here, this would be potentially a good place to try to add to your sell or to put a sell on if you didn't play the signal. Once it gets through these lows, you should be thinking there's a good chance it wants to go lower. Just as an aside, for purposes of the system, it's very cut and dry. This is your stop, this is where you entered, and there's your profit. Now that it's over here, you're up 14 points on your trade, less spread, you're up 12. All right, now it backs up. As you can see, that's trading. You see it backed up just about the entry point, but that's trading. That's the way it goes. Now you're actually, with spread, you're actually losing 2 points at the moment. And you had at one point, you had 25 points in the trade. Now you're actually losing a couple of points. But that's the nature of the beast, so to speak. That's how things trade. Your loss is getting a little, not really painful, 10 points against you, no big deal. 15 points against you. But I see how it's staying below this green line. It just doesn't have a purpose yet. Because if the high here was 690 and the low here was 590, it's only 100. So you don't have a valid swing. So you're not counting your bars. You don't have a Jimmy's band setup until you can see your bar requirement from 1400 to 1700 is 36 bars, 3 hours, 12 per hour. So you met your bar requirement, but you haven't met your swing requirement. This was 690. You need to get 116 lower than 690, which is going to be 574. So until you get down to 574, you haven't met your swing requirements. You're not going to have a Jimmy's band buy signal here. But keeping an eye that you're staying below the green, even though your trade is pretty much just a tiny, tiny profit, even if over here a tiny loss, you're still not doing too badly as a rule of thumb. Now once it breaks down, once you break down through this old low, that's a good sign for you. That's looking good. Because once again, you break into new low territory. And even up here, you see from the time you put it on, it went a little for you, it went against you, that kind of stinks. Then this is looking good, breaking the lows. Now when it goes back up, if it doesn't take out this last swing high on a short-term basis, that's a good one. That's a good sign too. And now it's making another swing low. So since it really looks like 1, 2, 3, 4, 5. So if you look at it, it's going lower. It's coming back up, but not as high. It's making another new low, coming back up, not as high, making another new low. So this trade is looking very good. And now at the moment it's at 86, 88 after spread. So you got 26 points in the trade. You still got a ways to go. That's a nice bar. So now you got a nice little pattern. If you look at this right here, what's cooking here, this is a sell-off going on. You can see because you're making lower highs every 5 minutes. This one, all in a row here. These are all lower highs every time. So you got a nice little sell-off going. So let's say it's down here at 63. You're in at 14. And now you got almost 50 in this trade. And you had picked up 70 on this one. So at the moment on the day, right here, you got 120 points. If you're starting to think chicken, you're starting to go a little chicken. But you don't really want to get out right here. But you do want to try to conserve a good day. What you could do is simply mathematically say, okay, I got 70 on this. I got 50 on this right now. Maybe if it goes to 30, I'll put my stop there. This way I pick up 70 and 30. So worst case, I make 100. See, you can think that way as a trader. You don't have to say, I have to stay in the trade either for here or here. you can make adjustments. You could simply say, if it goes above 1 bar, a 1 bar reversal, this is something we learned, I'll get out there. And this way I'll guarantee myself 112 points on the trade. You know, there are no rules is my main rule. I teach this a little different than other people. But let's continue with the Jimmy's band trade because that's what we're talking about. So now you get another leg down. So now you see this pattern of lower highs still in place. Now you're at 54, and you're at 54. Now let's review it here. You're at 54. So edit, add arrow. You're at 52, but with 2 point spread, you could buy it right now. Edit, add annotation. You could buy at 1.3554 with spread. You could actually buy it there, right? And if you wanted to, if you bought it here, what would it mean? It would mean you locked in 60 points. You locked in 60 points on the trade. So you have 60 from this one and 70 from that one. You had 130 points in the bank for the day. Now, also what you want to think about at this point in time is, how much more can you possibly make on this trade? When you originally put the trade on, you were risking 80 to make 80. So you had a 1-to-1 risk reward. Now, the most you can make from this point going forward is 20, because you're going to get out at 34. So you can only make 20, but you're risking the 60 profit you have in it, plus the 80 for your stop. So now you're risking 140 to make 20. So when you risk 120 to make 40, you're risking 7 for each one you're trying to make. You simply take 140 divided by the 20, and it comes out to 7 to 1. So you're risking 7 to make 1. So that's not too good. So at this point in time, you should be thinking a little on the defensive side and saying, I got a lot of money in this. You know, I'm not going to let it do this to me because I'm a trader. I'm not an investor. You know, and I'm watching the market here. I'm supposed to be doing something here. Besides staring at the screen, I should actually be thinking about a game plan here. So your game plan is, don't let too much of this get away. Now let's see what happens. It has a little bit of a retracement. You know, now, see, here's the thing. It was at 54. Now it's at 80. And it still ain't so bad because even with spread, you buy it at 82. You make 32, and you had 70, so you still have a 100-point day. You still got a triple-digit day, which ain't bad. But it still don't look bad from the point of view, that you got your swings are still edit, add arrow. So your swings, this is a swing. Not the swings for Jimmy's bands, but just in general, the little movements of it on a 5-minute basis. You can see. At this point in time, this doesn't look bad at all from the point of view. The low got lower each time. The high got lower each time. So far, so good. Now, another thing you want to consider at this point in time, edit, let's delete those little things we just stuck here, which is this one, this one, this one, this one, and this one, and this one. And consider this. From our 136.90, our swing high, we needed to come down 116, which is 135.74. We did come down to 135.74 right here. So at this point in time, we have met our swing requirement right there at 74. So we have a valid swing down, starting with the bar completely below the red line. You need 36 in a row, none above the green line, to meet your bar requirement. So you've met your bar requirement, you've met your swing requirement. So the next time you have a bar completely above here, that would be a Jimmy's band buy signal. So you would be changing your stop loss on this trade to, if you get a signal to buy it, you close out your short and you put on a long. So this stop would be your stop loss on this trade as of right here. Let me just go back here a little bit. This we don't need because this was just to show you an example of risk reward. But right here, as of that bar right there, you've met your swing requirement for a downswing. So now you're in a downswing. You've met your bar requirement. You have at least 36 bars in a row with none above here, starting one totally below the red. None above the green, just touching above the green at all. So you met your bar requirement and your swing requirement. So the next time you go here and a bar is completely above the green, you're going to have a buy signal for Jimmy's bands, which means you're going to close out that short. So your new stop loss is going to be the lesser of right here, or if you get a signal over here, whichever happens first. It's possible you just get one huge spike, and so it started from below, so you didn't get a Jimmy's band buy signal yet, and that would be your stop. Unlikely. Most likely you're going to get something right in here. So you can almost count on your stop being less than here at least. So you can refigure that in your thinking when you're figuring out your risk reward as well. But it's not 100% clear because you don't know exactly what the buy price would be. So it's not exact. But we're traders, remember. We're not robots. We're not machines. We're actually thinking traders. All right, so let's move on. See what happens. So that happened. We got another move. Now this is looking really good because when this retracement finished, we made another new low, which tells us we're in really good shape. But now we got the same quagmire, which is we're 20 points away essentially, and we're still risking at least this line here. Although it's less, we still could lose a little money on this trade. We don't know exactly how it could play out, or a lot of money on the trade, so it's not definite. But it's looking awfully good. Now over here, you can see the low price, and here, get this. The low price is 32, and our take profit was 34, so we would have hit our take profit, right? Because the lowest price was 32. Our take profit is 34, which means the price, when this hit 32, the price on your platform was 32 to 34, so you would be able to buy back your short sale at 34. So you hit your profit right here. So there's your profit. So delete. And so your second trade is complete over here when it hit 32. So F1, I just want to take a quick picture of this. Bear with me. Okay, so that's I'm going to get rid of that right away. I think I can do it right this time. There we go. All right, so we hit our second profit. So now on our first trade we made 70 today, and our second trade we made 80. So we got 150 points. Now, it's already, our day ends at 2,200 hours, right? Because the new day begins at 2,200 hours. So we're right here. We have this much left in our day. So at this point in time, it would be a good idea to say, I had a great day, turn off the machine, and thank your lucky stars. If you stayed with it this long to begin with, you had a great day, so call it a ball game. But you see, here's our start of the day, and this is where we started trading. This is where we got our first signal. This is where we exited our first signal. This is where we got our second signal. This is where we exited our second signal. Now, for the rest of the day, now what you want to realize is, as of here, you remember you've met your swing requirement, you've met your bar requirement, so the next time it goes above here, you're going to get a buy signal. So that's going to be your next signal. So the thing to remember about Jimmy's bands is you can only get one signal at a time. So now go, and what we want is 2155, which is right here. 2155, which is our end of day. That's our end of day, and then the next bar is going to be the start of Thursday, the start of tomorrow. Right? So we usually leave a little bit extra here from our start of the day. This is what you usually see in the trade trade finder. And what's missing here is we can't see our room to go numbers. So I'm going to hit shift, and I'm going to move my scroll so that I can get them in there. So there's our room to go on the bottom, the room to go on top, and room to go on the bottom, so we can see the perspective of the entire day and how it worked out. Now this is picture perfect. This is a picture perfect day for us. We bought it, we made 70 points. We sold it, we made 80 points. We didn't have to catch bottoms, we didn't have to catch tops and bottoms. What we had to do is wait till it showed some clear momentum and then go with it. And if you notice, from the time we put on our trade, it was never much against us in terms of our band in either direction. So this is very, very nice day for Jimmy's band. So I'm going to F1 this, make one more picture. And, okay, so I'm going to send this to everybody right now, and I'm going to label it and call it, just a tutorial. And Trade Finder will be out later tonight, but I thought this would be helpful. Today is September the 28th, and this is a rundown of the Jimmy's band system. I am going to follow it up by putting the European breakout system on this and discussing the European breakout trade, and then from there talking about the both of them together, and then from there adding in the stocks. And in a series of webinars this evening, I'm going to give you a fuller picture of what we do, and hopefully this will be helpful, especially some of our newer people. All right. Well, thank you for your time. I will, as I said, follow this up. But for now, I'm just going to minimize this, and I'm going to close this tape. And I hope you have enjoyed this. To me, I'm signing off for now. Bye-bye.